Hey, everybody. Hope everybody's doing great. Hope you've got a great beginning to your summer and have big plans and everything for the rest of the summer and wonderful vacations and time to spend with your family and friends. Wanted to get with you, let you know that the move went well. Our offices are beautiful. I love it. I think this is probably the office that I like the best of anyone that we've ever gone to. It's more of a park-like setting. It's easier accessible, easy parking, so forth and so on. You'll love it. If you get a chance, come by and see us. We'd love to have you. Going to do more and more of these updates from time to time because the markets are getting crazy, and this way we can stay in touch with each other a little bit more often. But with that said, I wanted to get with us on the markets. I'd love to tell you that the Dow's plunge yesterday would be over almost as quick as it begun. But this time, I'm not so sure. Given the president's tweets and the tenor and the tone that he has on trade, um, while that may be good for headlines, yes, politics debatable, but stock markets not so much. So with that going on, it's the markets are going to start having a little, or are going to be a little bit more choppy and a little bit more volatile than we've even seen. But that's okay. We're prepared. We've been planning for this contingency, and how we've been planning is by tightening up our stop losses, our trailing stops, and continually reinforcing the need to harvest cash by taking a lot of the profits as the market handles them to us. So I just wanted to kind of let everyone know kind of what's going on. And one of the other ways that we're doing this is we're taking advantage of this. Volatility is good in the markets, especially when you're looking to create additional profits. We're going to start splitting your capital into chunks. And the way we do that is we dollar cost average. And basically that means we're buying into those companies that we like. As we buy into those companies, we're not going to buy a full lot. We'll sit back and if there's volatility and let the markets correct, then we'll buy more at that time. And that way we dollar cost the average of the cost basis down. And this way we harness the market's volatility to your advantage when other folks are out there panicking and making bad investment decisions. Now, I know this might give you some pause, but I understand, but I also urge you to think rationally about how investing works. The best profits and the biggest gains always goes to those who buy low and sell high. Simple. Not as easy to do, but it's a simple concept. So let's go back and sink our teeth into the president's last trade-related tweets that caused the market to plummet a little bit. This time, he's actually threatened to bar China's companies from investing directly. Now, again, I'm not talking politics here. I'm a fan, as you guys know, but I'm just talking strictly capital markets and how it affects us in the investing world, and specifically affects you and what we're doing about it. So with his threatening to bar China's companies from investing directly in the U.S. companies, and doing so has really changed the game. And I really hope he knows what he's getting into. But to paraphrase the Chinese president, who wasted no time in responding, he said, "China will punch back." Now, okay, fine. But what you need to understand is that's significant. And the reason it's significant is because I've never in my career seen a Chinese public official come back with that strong of a statement, that fast and that strong. And I really don't think that these are idle threats from China. But unbeknownst to most Americans, China has the economic capacity to wage a protracted war, trade war with the United States. And in doing so, dramatically can change, kind of the world order, so to speak. But what's scarier is China could win. China has the world's largest economy for 18 of the last 20 centuries. And it will, again, thanks to the world's it's again to their largest middle class, the world's largest middle class. What you need to understand is that the president's now threatened to cut off foreign direct investment can strangle the flood of capital to some of our top companies who need the China investment to survive. But with that being said, here's the key takeaway is I think cooler heads will ultimately prevail, but that may take a while based on the tweets and the comments back and forth by both political parties. But again, like I said, fortunately we're prepared, so we're going to get through this. And right now, the single most thing that you can do is to make sure that your trailing stops are in place, and we're doing that. And why are we doing that? It's because trailing stops are intended to, A, help you capture profits when the markets want to hand them to you, and B, reduce risk by raising cash. So we're going to sell. We're going to sell them, and when they hit, when the stop losses hit, we're not going to look back. Times like these are not kind to those who try to second guess the market. We can always re-enter positions we like, and we will when time comes. So anyway, if you have any questions, feel free to call me. I'm here for you. Let me know, but just wanted to keep you up to date as to what's going on. Listen, have a great day. God bless America. Bye.